an ideological war being waged on the pages of the Financial Times. Emmanuel Macron was interviewed last week, and he said that if European leaders don't come up with a solution to solve the coronavirus crisis, but particularly the financial issues that EU countries face, that the EU will never recover. So is that him blackmailing Germany to try and tell them, listen, if you don't sort us out with some sort of an equal fund that allows us all to be on a level playing field, then we will pull the plug on the European Union, and basically you will not be able to have a stable environment to do business in. So that's in a way Macron doing to Germany a little bit like what the Brits were doing with Brexit, except the Brits left. And in a way that means that Macron is quite similar to Trump. He's talking to Putin and Trump as well, and these arguments, they come up. The country goes through a certain process, and the leader has to react the way he does. So anyway, Macron was moving to get the Germans to agree to grants, not loans. That's basically the thing. And then you had Christine Lagarde, who also said we need to come up with a solution to the leaders. And now there was an article yesterday in the FT, published probably on Sunday night, saying ECB predicted to beef up asset purchases with shift into junk bonds. So there's a picture of Christine Lagarde, and then it says, after EU leaders failed to agree coronavirus recovery fund, central bank seen as the only game in town, as still the only game in town. And then you have European Central Bank will start buying riskier debt and expand the size of its bond buying program, economists predict, as it intensifies efforts to shield the Eurozone economy and financial markets from the coronavirus crisis. So it's presenting it as if the European Central Bank is trying to protect the EU from the coronavirus crisis, but actually it's a full-blown financial crisis. And the coronavirus may have accelerated the process. I mean, it's interesting because actually some people say that on your death certificate, if they put down coronavirus, and the question is, did you die with coronavirus or from? Did the coronavirus kill you, or did you die of other stuff and you also had coronavirus at the same time, which may have slightly accelerated it, but it's not the reason for your death. And so people talk about the underlying causes of death, underlying health issues. They say he had no underlying health issues, or he had underlying health issues. So in a way, people talk about zombie economics and zombie banks. This is exactly what's going on. You have a lot of zombie banks who are the living dead, and not just banks but financial organizations who take a lot of risk, and then the European Central Bank it looks like they're going to bail them out. These are organizations that might normally have gone bankrupt because of their bad investments. They can say, oh, there's a massive crisis here, you have to save everyone, including us. A very similar thing is happening in America as well, where they're trying to protect as many businesses as possible. And if you're one of the few businesses that doesn't get protected, then you can say, well, why didn't you protect me? I'm going to speak to my local politician, blah, blah, blah. And the politician will know that they might not, get all the votes they want if this company isn't bailed out. So then the politician will have to tell the government to bail out the company, blah, blah, blah. And it's a whole merry-go-round. Either you bail everyone out or no one. And if you go to some, then it's discretion and it's nepotism, corruption, friends, all that type of thing. Anyway, ECB predicted to beef up asset purchases with shift into junk bonds. After EU leaders failed to agree coronavirus recovery bond, central bank seen as only game in town. So predicted to beef up asset purchases. So beef up means strengthen. And as language, it's sort of like bodybuilding. Yeah, testosterone. So yeah, testosterone is a very interesting concept because language is one of the tools that's used in order to persuade people and financial markets that everything is going the way you want them to think it's going. So when I say ideological war is being waged on the pages of the FT, so for example, to contextualize, Macron was saying to all of the other leaders, particularly Germany, we need to agree something. That's also Austria, Netherlands, Finland, all of the northern countries who have surpluses, who don't go into debt. Macron was saying, listen, you need to step up. You need to lend to your neighbours because we're all in this community together, and if you don't, the euro will disappear. So he failed. Germany said, look, we'll give loans but not grants, and so that means that the thing that was called the Coronavirus Recovery Fund, it's not going to be grants, it's going to be loans. So all these countries that are already in enough problems are just going to get into more debt if they agree it, so they're not going to agree it. There was another proposal as well. Well, we'll talk about that in the other article. That was called perpetual bonds. Spain made it, and so did George Soros. Again, war-type finance. So all of these things are not being agreed. So then what they say is the European Central Bank is the only game in town. So ECB predicted to beef up asset purchases. So beef up, as I said, is the language of testosterone, asset purchases. So it's basically doing more buying of quantitative easing of bonds, and then asset purchases as well. So I'm looking at combinations of words: beef up and asset purchases. Beef up meaning strengthen, asset purchases meaning buying bonds. It could be shares as well, but on this occasion it's bonds, but they don't specify exactly which type. And then it says with shift into junk bonds. So these are not high quality bonds. So if you buy certain bonds, then you know they're going to repay. So if you buy a bond from the German government, you know it's very healthy, it's very likely to repay, you don't get much interest. If you buy a junk bond, then you're going to get a lot of interest, but it might go bankrupt and you might not get any money back. The ECB is starting to buy those. So the ECB used to be known as a fairly conservative organisation whose only job was to stop prices from going up too quickly when the economy was growing. So it was there to try and stop the economy growing too quick because it didn't want inflation. That was its main mission at the beginning, 20 years ago. But now it's going to buy junk bonds. So that means somebody has lent to a risky company that most people don't want to lend to. And when they did that lending to a risky company, they then issued bonds to say, listen, you can make a huge profit if you buy these, but it might go bankrupt. Whoever issued those bonds is responsible for making sure that company works, and the European Central Bank is going to help them by buying those bonds. So this is hugely controversial. Whereas before they bought government bonds, now they're going to buy these. Then it says after EU leaders failed to agree coronavirus recovery fund, the central bank is seen as still only game in town. So only game in town, that's another expression. So in the same way that you have whatever it takes, which Mario Draghi said in 2012, talking about what he was prepared to do to protect the euro. Now, the only game in town, what that means is no choice. Sometimes Margaret Thatcher is associated with the term TINA, there is no alternative, which is exactly the same thing. So the leaders are not, EU leaders are not willing to agree on a strategy, and that's because Germany says we won't just give money to the other countries, meaning if we start doing that, we'll never stop. So Germany won't give money to the other countries as grants, as emergency grants to fund them. The other countries say, well, look, we don't want loans. And so what's happening is southern countries won't take loans, Germany won't give grants. So the European Central Bank, run by Christine Lagarde, who, like Macron, used to be a finance minister in France, she's stepping in and she's saying, if you don't agree to give grants to save these countries now, then what I will do is I will go into financial markets as the European Central Bank and just start buying bonds. So that'll be government bonds, but it'll be all sorts of bonds. So basically she's flooding the markets with her money, distorting the market, printing euros. Now, apparently they've already bought 2.8 trillion assets, euros worth of assets. These are government bonds in the last 10 years, I think, particularly in the last 5 years. And that's called the Pandemic Emergency Purchase Program. That's what they're starting up now. But the 2.8 trillion is from the Covered Bond Purchase Program, and basically just quantitative easing, where they've been doing this already. Some people call it printing money. The term quantitative easing was coined by a guy called Richard Werner in Japan. He's a German economist. I think he's in England now. He looks like he's gone a bit mental now. I mean, I think he's right. He's a classic example of someone who's right about almost everything, but is not very likable. So I think he's become a very nationalist German. So I think he's behind the AfD party. Not behind, but he backs them. And in a way, if you look at how all these central banks have behaved, it's kind of understandable. It's a shame that everyone is told either you are agreeing with the government or you're a racist, because that's really what's happening. If you don't agree with the government, you're called a racist, and the government becomes more racist and blah, blah, blah. What I mean is that the banking policy that's being pushed out by the European Central Bank, it's really unhealthy. There's no discussion about what should be done. It's all done because they won't agree, so we'll do this. And it's a real shame because it's undemocratic. The central banks, they don't ask people what they think, they just do it. and in the end, the consequences are borne by the people whose money they're printing, but they're not giving to the people whose money they're printing. So all of the governments will end up doing austerity, and all these economies will shrink. But at the same time, they'll give money to the banks, and the banks will benefit hugely, and the economy will continue to contract. Who knows how long it will take to recover, and who knows who will be able to participate in the recovery. I don't know. So then it says here, the European Central Bank will start buying riskier debt and expand the size of its bond buying program. That's another interesting expression, bond buying program. So that's where, as I said, the central bank buys bonds. It's not supposed to do that, but it's QE. So economists are predicting that the central bank will start buying riskier debt and expand the size of its bond purchase program as it intensifies efforts. That's another good expression, to intensify efforts. It means to try harder, to shield, to protect the Eurozone economy. That means every country that has the euro as its currency, and financial markets from the coronavirus crisis. So the European Central Bank is being pictured as some sort of hero, but in actual fact, it's only doing it because nobody else wants to do it. The ECB is expected to broaden. So look at the way they say expected to. So before they say economists predict, then it says expected to broaden. So they're managing expectations. They're telling everyone this is going to happen. We'll say it's predicted and it's expected and all of that stuff, but we know it's happening. The public relations team from the European Central Bank have given us this, and so we're going to try and make it look as though, oh, we're not sure what's happening, but it's definitely written, expect it, and that's it. So yeah, it's expected to broaden its assets. Broaden is an interesting word. That means to just buy more, basically. But no, not just buy more. It means different types. So going from very reliable to very risky. To broaden the assets it buys under its recently launched €750 billion pandemic emergency purchase program. So, I mean, it's just a purchase program. They're just buying bonds, but here they call it the pandemic emergency purchase program. This will include riskier, and then here we go. This is a term that they use. I've never seen it before. They use it here, and they use it several times. This will include the fallen angel bonds that have recently lost their investment grade credit rating, a dozen economists told the Financial Times. So 12 economists have been picked probably by the European Central Bank, and they've written down a bunch of quotes, and they've given it to the Financial Times. The Financial Times saying, oh, thank you. We've been told this, but actually they've been told it by a public relations firm. I'm sure that's what's going on. But yeah, the main thing is that they're calling it fallen angel. So this term fallen angel isn't in the headline, isn't in the blurb, isn't in the first paragraph, but it's in the second paragraph. However, that's not where it ends. It's in the second paragraph, but it's also in not the third, not the fourth. In the third paragraph, they say quantitative easing, and they say 2.8 trillion euros worth of bonds have already been bought by the European Central Bank before this 750 billion pandemic emergency. So that's taking it up to 3.5 trillion. In the fourth paragraph, it says, we're not sure. They're going to discuss it on Thursday. We're not sure, which means they're going to do it. And then on the fifth paragraph, it says, 1, 2, 3, 4. In the fifth paragraph, it could also be that they start to buy fallen angels. So the second mention of fallen angels says Elgar Barch, head of economic and markets research at BlackRock. Eventually, I think they need to step up the pandemic emergency purchase program and add more time and extra resources to that. So that means she's saying diversify. But hold on a second, she's BlackRock, and BlackRock have got all sorts of stuff. So BlackRock saying that they have to do it, this is a bit weird. I mean, the European Central Bank have got BlackRock telling them, we want you to buy things that we are in the market for. We have got these products, and if you buy them, then the value will go up. So you're propping up our markets. And she goes, I think they have to do it. What that really means is we're in deep shit, and if she doesn't do it, then we're going to lose a lot of money. Frederic Tucroze, strategist at Pictet Wealth Management, calculated that at €5 billion per day rate, it was buying assets under the pandemic emergency purchase program. It would be exhausted by September, and expected it to add at least €250 billion of extra firepower by the summer. So he's saying it's going to go up to $1 trillion. After EU government leaders failed to agree last week on proposals to create a €1 trillion plus euro recovery fund to support the region's coronavirus-stricken economies, Mr. De Croze said the European Central Bank was still the only game in town. Yeah, so Tina, there is no alternative to stop the pandemic spiraling into a deeper financial crisis. So yeah, either the governments, particularly the German government, steps in and says, right, okay, we agree the European Union needs to have a fund that helps everyone out because they're all facing the same problem. That's what the FT said as well a few months ago. They said everyone is facing the same problem, so why don't we just have one tax for Europe as well as one money? Simple as that. And of course Germany said no. After EU, so then ECB President Christine Lagarde told EU leaders last Thursday they risked doing too little too late and forecast the Eurozone economy could shrink by 15% this year in a worst case scenario of the lockdown lasting several more weeks. So that's Christine Lagarde, the ECB leader, saying, to all of the other leaders, you've got to do something, which we know they didn't. Investors are particularly focused on Italy's rising borrowing costs and worry its bonds could become the biggest fallen angel if it loses its investment-grade credit rating over fears about the deep recession facing the country and its mushrooming national debt. On Friday, Standard & Poor's, another credit agency, much discredited actually in the last financial crisis because they didn't spot the unhealthy content of many of the bonds that they'd given AAA ratings to. They basically said all these things were okay when they weren't. Standard & Poor's decided against downgrading Italy, saying the ECB's bond buying was backstopping this additional public borrowing. So basically the credit agency said, no, even though Italy is having lots of problems due to its budget and its ability to meet its own commitments to its people, we would normally downgrade it for being in such financial difficulty, but we're not going to because we know the ECB are backstopping additional public borrowing. But what does that mean? Because the ECB, what are they going to do? They're going to buy the Italian bonds, and the Italian government will say, we've issued the bonds. The thing all the leaders were trying to agree was to just give money to Italy. And now what's going to happen is instead of just giving them money as grants, Italy, and instead of giving them loans, Italy will issue bonds and the European Central Bank will buy them. It's like a time bomb, really, isn't it? Because then the European Central Bank owns, more and more Italian debt. The Italian nationalists, the ones who want to leave the euro, the populists, they don't want to take loans because they know that means that there'll be lots of conditions that come with the loans. Now they are going to be issuing debt as bonds, and they're going to be their main creditor will be the European Central Bank. So what will happen? Will the ECB say, listen, we are now blackmailing you if you don't do what we want, as in if you don't have this government policy, because that's what it means, isn't it? The ECB could dictate government policy in Italy, and that could cause more problems. Anyway, the expected move by the ECB into buying sovereign, so government, and corporate fallen angels with a credit rating that drops as far as a certain level below investment grade. So this is basically where something is becoming such a bad investment that nobody would touch it, but the ECB are going in for government and corporate bonds, would be aimed at containing the fallout from an expected wave of downgrades in response to the pandemic. So basically, loads of things are going to be downgraded. Loads of bonds, loads of debt is going to be downgraded, and the ECB are there trying to say, no, seriously, this debt is fine, even we're going to buy it, it's all completely respectable, and we don't want the market to collapse. Gilles Moek, chief economist at AXA, said such a move makes sense to ensure the survival of as big a share of the corporate sector as possible. So look at that, the European Central Bank are bailing out the corporate sector. The corporate sector are in trouble. The pandemic has destroyed the chances of survival of many companies, including big companies, but some small. And the European Central Bank is supposedly saving them, but what's the condition? They'll say, oh, hi. These companies will say, oh, yeah, does anybody want to buy any of our bonds? And the European Central Bank will say, yeah. Is that it? No questions asked? Who believes that? And if it is no questions asked, then who's going to save them in the future? What's going on? And will the European Central Bank lose all the money? It would be following in the footsteps of the US Federal Reserve, which said this month it would start buying fallen angel bonds, as well as shares in exchange-traded funds that invest in high-yield debt markets. Yes, so Trump has bailed out a lot of fraudsters in Wall Street already. He pardoned a lot, including a guy called Michael Milken, who had a company called Drexel Burnham. So Trump is known to have a lot of what they call buyout people asset strippers, those types of people from the 80s. A lot of those people are surrounding him. And yeah, so the US have been buying high-risk debt, the Federal Reserve, really. The high-yield market, often referred to as junk, encompasses the debt issued by lower-rated, riskier companies and governments that are more exposed to the impact of the pandemic and the subsequent lockdowns on companies and households. So, yeah, countries that are heavily exposed to losing money need help. Both the European and the larger US high-yield markets largely froze during the coronavirus-sparked volatility in March, shutting off capital to lowly rated groups just as their businesses suffered from a drop-off in revenue. But the US market has reopened on the back of the Fed's decision, and European high-yield bonds also recovered some of their lost ground. So the fact that the Fed and the European Central Bank, the Fed is the American Central Bank, the fact that they've both said, oh yeah, we're okay with buying junk bonds, means that the junk bond market is back up and running again. Dirk Schumacher, economist at Natixis, said there were about 65 billion euros of potential fallen angel bonds in Europe that were likely to be downgraded soon, and about 280 billion such bonds in the US. I can see the ECB buying fallen angels, he said. They obviously want to protect their balance sheet, but the overall macro considerations could trump this if things keep deteriorating. So they can buy them, but there's a certain point where they have to say things are so bad we're not going to go in, because all we're doing is throwing money away. While it would be welcomed by investors, a move by the ECB to start buying fallen angels is likely to trigger criticism that it's going beyond its mandate to control inflation by bailing out over-indebted companies, many of them owned by private equity. So here we go. Obviously, BlackRock is an asset manager, but you've got these other private equity firms that don't have stock market, they're not available on the stock market. They've got shareholders, but it's all private. And if they are taking huge risk, they're doing that because they can afford to lose the money. Or if they lose the money, there's no public impact of them losing their money. There is a public impact of the company that they've invested in going bankrupt, but that is something that would have already existed. So the point is, the European Central Bank are buying all of these fallen angels, all this dodgy debt, but they're buying it from or to prop up private companies that don't really pay tax or don't really allow the public to invest in them either. So people are saying, who are you really helping here? Oh, we're helping everyone, but really, who's individually getting the money or being prevented from losing money? This would mean extending quantitative easing directly to the worst hit sectors and companies of the real economy, said Volker Wieland, a professor at the Institute for Monetary and Financial Stability in Frankfurt. Okay, so who agrees with this? Bailing out companies on a large scale by direct purchases of their debt is not really the job of the European Central Bank. There could eventually be substantial losses to be absorbed by the ECB and thus the taxpayer. Well, at least he told the truth there. Basically, they're printing money and they don't really care what the costs are because they say this is an emergency. It's a bit like in the hospital where they won't allow anyone to visit any patients, or in the care homes, and they say, oh, this is all very important, we're trying to help, so nobody can visit patients. So it's like Operation Successful, patient died. In order to save the village, we had to destroy the village. All that type of psychology. Very bureaucratic. Look, we found a solution. Everything else, we don't really care about. And suddenly you say, yeah, but the solution is worse than the problem. The ECB has already said it would accept fallen angel bonds as collateral from banks in return for its ultra cheap loans. It's also granted a waiver, so that means an exception to Greek government bonds that allowed it to buy them and accept them as collateral, even though they're already junk rated. Last week, Italy's 10-year government bond yield climbed to over 2% for the first time. So that means that you would get a lot of money if you bought an Italian government bond last week in comparison to other investments. 2% is a lot. While the spread over German bonds, a closely watched measure of risk within the Eurozone, widened close to 2.4 percentage points. So what that means is you get over 2% if you buy an Italian bond, and if you buy a German bond, you are paying the German government. They don't give you any money. You're paying them to look after your money. Why? Because they will. So if you give them 2 billion, you know that they'll give you back 1.98 billion, and you say that's okay. I'd rather lose 200 million, or I'd rather lose 20 billion and you look after my 200 billion than give it to Italy, who are promising to give me 40 billion or 20 billion or something like that. I mean, they're probably, point is, Italy are promising to return you money, but they might not. Whereas Germany are saying, no, we'll charge you to look after it, but they'll give it back. Anyway, that's a measure of the risk on Italy. This is not far, as in the 2.4 percentage points gap, is not far off the peak of 2.8 percentage points during a sell-off in the riskier corners of the Eurozone debt markets in March, when the ECB launched its €750 billion extra bond buying plan and offered banks over €3 trillion of ultra-cheap liquidity. With credit stresses ever present in sovereign bank and credit markets, it remains essential that the ECB stays ahead of the risk curve, says Lida Komileva, chief economist at G+ Economics. So I've never heard of them. So she's just been hired, this economist, to give this quote to say whatever the European Central Bank is doing is the right thing. So yeah, the term fallen angels is coming up a lot, and really this is pushing for people to accept what the European Central Bank is doing. It's putting a little bit of dissent there, saying, well, there could be effects, there could be costs, but it's not making that big a deal out of it. It's just saying, accept it. This is where we are. This is the situation. So, yeah, controversial in many ways. Now, what do you take away from this? I mean, I've been talking to you for half an hour, and that's been hopefully useful. I mean, it's been useful for me. I'm going to listen back to what I said and maybe even get the transcript and see if there is a quicker way of me describing everything and me trying to do that.